So is the rally about to broaden out or fizzle out altogether? Let's ask Chris Grisanti, Chief Equity Strategist at MAI Capital Management, and Garcia, Amaya, the CEO of Zoe Financial. Welcome, gentlemen. Chris, I'll start with you. It sounds like you're fading big tech.
Yeah, Kelly, it's good to be with you again. I would say it's a better bet at this point to think that small will outperform large. I'm not sure which way the market will go. It really feels like it has a lot of momentum and it could easily broaden. But even if it broadens, what you want to own is the stuff that's lagged at this point. Apple, this is a great statistic, Apple alone is now worth more than all the stocks in the Russell 2000 index put together. That's never happened before. 5 years ago, it was worth only a third of the index. So that pendulum seems to be swinging just about as far as it's able to go. NVIDIA is up almost 200% this year, things like that. So I say let's take the other side of that bet and find some smaller names. They don't have to be small cap, but smaller names, 30, 40, 60 billion, that can outperform in the second half.
One more just as a follow-up before I kind of hone in on that is, are you concerned that if this, Magnificent Seven reverses or, collapses or something to that extent, is the whole rally fizzling out? Or do you feel comfortable that it can, maybe broaden, keep going, and just have different leadership and absorb that correction?
I think it depends on the devil will be in the details, Kelly. I think if NVIDIA, Apple, Microsoft plunge, sure, the rally is over. But what I suspect is more likely to happen is they may tread some water, consolidate their gains, and let some other folks take over market leadership for a while.
So, Andres, I'll turn to you because I think, if I recall correctly, you've been warning about this market for the last couple of months, even as we've watched these Magnificent Seven vault into kind of overstretched territory. So would you join Chris in picking through some of the smaller caps, or are you moving more to the sidelines altogether?
I think you have to look at relative valuation to bonds and cash and ask yourself, where is that incremental dollar? Once the AI kind of enthusiasm filters through, where's that incremental dollar going to go, right? And from that perspective, I think bonds and even cash is where that incremental dollar is going to go, especially when you look at those seven. Stock like NVIDIA is trading more than 30 times sales, right? So once some of this kind of enthusiasm fizzles out, it reminds me a little bit of when Tesla was trading at those valuations and what happens next, right? So I do think there's going to be some consolidation. And in order to see broadening out of the stock market, you need to see earnings continue to deliver. And that's going to take a couple quarters to see through rather than weeks. And
are you looking more at fixed income? Because it's kind of a running joke. Everyone going, wow, I can get 4 or 5% in treasuries. And everyone's like, great, I got 80%, on the mega caps.
Totally. I mean, we said similar things in 2020, right? And I think we're still trading on nostalgia of a bygone era of, hey, the Fed's going to lower interest rates to zero. Inflation is going back to 1% and 2%. I've been saying this a couple of times over, right? It takes a long time for market participants to adjust to a new regime. And I think we're just kind of trading on that nostalgia of, just buy the flyers and close your eyes.
All right. So, Chris, before we go, I want to clarify. It's not like you're actually reaching for small caps here. We're talking about Dollar General, $36 billion. ICE, why does that one jump out to you?
Kelly, I like ICE. I'm still kind of afraid that we haven't seen the end of the banking issues. I think commercial real estate, I'm not saying anything shocking here. Commercial real estate really has some work to get through. So I'd like a financial that's inexpensive, maybe has been caught up a little bit in the tar on the financials, but that doesn't take interest rate, that doesn't have bad loans. So ICE runs, as you know, commodity exchanges, primarily oil and interest rates. And they don't care whether the commodity goes up or down, they just care about the volume. It's a terrific business. It's selling well below its 21 lows. And this is the kind of stock that has lagged the mega caps. It's a $60 billion market cap. So that's not a small company, although it's a 40th of the size of Apple. So, that's the place I would be looking now if I were investors. There's some in finance, there's some in retail, there's some all over the place, and they've just been left behind, and they're kind of interesting and cheap.
The anti-mega caps. We'll leave it there. Gentlemen, thank you both. Chris Grisanti, Garcia, Amaya. We appreciate it.